So we just got back from vacation. As we go in there, I take these headphones with me to vacation. And what I do is I put my phone on one of the beach chairs, next to the pool. And these are wireless. So I'll pull this wire out and I'll run it on Bluetooth and listen to my music. And the problem is when I'm listening to my music, I'm singing. So I'll get in the pool and sing. So on the way to Myrtle Beach, Beth is like, listen, I'm going to tell you something, dude. Brother, you are not getting in the pool with those gaudy looking headphones you wear and singing. And I said, why? She said, it's embarrassing, Bobby. She said, people look at you funny. And I said, what do you mean? She said, they look at you like, something's not right with you. She said, and I don't tell you this, but I think it embarrasses your mama too. So I asked Mama, I said, Mama, does it embarrass you when I sing in the swimming pool, in front of the crowd and everything with my headphones on? She says, Bubba, it doesn't embarrass me, but I think that people think something's wrong with you. Okay. So this time I didn't get in the pool with my headphones. So, we all have our thing. I think I sang pretty good. Beth, do I not sing good? Beth, you in here? Anyway, so good morning, good afternoon, whatever it is. Beth and I are fixing to go into the Southern Lady to get us a little lunch. So all is well. So every time I go on vacation without ceasing, we talked about this yesterday, but I'll draw it for you. You see the cartoon before with the couple on the beach, they're sitting there, and the husband's over here and his little ladies over here, and they're holding hands, sitting on the beach. She's got a dream bubble out here, and she's dreaming about being with sweet Bobby and how nice life is with our 5 little kids and us walking hand in hand on the beach. That's what Beth's thinking about. And over here, Bobby's got a little dream bubble, and he's thinking about charts, algorithms, trading, and all kinds of. See, I've seen that cartoon before. It is kind of true, right? So when I go on vacation, I get refreshed, in so many ways. That's why we all need to take time off. Oh, do we need to take time off? That doesn't mean I didn't trade. But, we didn't do the class. Ken graciously had y'all in good hands, taking care with y'all and everything. But, it gives you a chance to just sit back and relax and come up with some new ideas. So what? What's wrong with it? Beth's been chasing the duck, trying to get it back into the pen. Did you get the fish net? That's the best one? Okay. I have it on it. It would take off running. We'll try to catch him in a little bit. Ducks are hard to catch, y'all. They're fast. It's a girl. You can tell a girl duck from a boy duck because the girls make noises. I mean, they just incessantly, and the poor guy never gets a chance to get a word in. So the boy ducks, they're never talking. So while I was on vacation, I came up with this little plan, and I thought it was kind of neat. And I call it Sweet Butts. I think that's a cute name, right? The Sweet Bobby Ultimate TQQQ Trading Strategy. So they say you can't hold TQQQ long term. Here's my plan. I love it when someone tells me I can't do something, right? So here's what we started off with. You do 80% of your portfolio in TQQQ. You keep 20% in cash. Or you can do a more conservative allocation. You do 50-50. Doesn't matter. Whatever you want to do. You say, Bobby, that's too much risk for me. Okay, do 10-80. Do 10-90, sorry. 10-90, 20-80, whatever you want to do. Put a little bit in TQQ, right? Put a little bit in. You don't have to be like me and just go into the casino. So then we use Robert Lucello's AIM algorithm to initiate new buy and sell orders. Wow. Well, where do you get that? Well, it's in my little spreadsheet, right? We've done it in spreadsheet. I'm going to make one more tweak on spreadsheet, and then I'll share it to you all. Okay, I got one more tweak I can make. Then, and notice how I credit everybody. This is not me. I didn't come up with this. Robert Lucello came up with it. I'm just using his tool. Then we do like using the run. Give me these notifications. We do like using Ron Bertino's Black Swan Hedge. I think dang it, we've seen the power of the Black Swan Hedge to protect our downside. Then we also utilize Option Alpha's Vix Hedge to provide additional downside protection. Then we really like using the 1-1-1 options trade to provide protection during a slow grind down market. And we only enter this 1-1-1 trade on trades when the market is down. Okay? So we got our little rules going here. Then, now you don't have to do this one if you don't want to. I thought it's kind of neat though, right? So you've got so much positive delta with this entire strategy. Well, how can you, mute it a little bit and also provide an additional stream of income on this strategy? Well, you can sell covered calls on your TQQ shares, right? Which gives you some negative delta. You know, and does it care? Do you care if it blasts past your call strike? No, you really don't. You really don't. You know, because what could you do with that? Well, you can get called away. You can sell puts then to initiate. You could do the wheel, right? You get a wheel on the TQQQ. You know, whatever floats your boat. I mean, there's all kind of things that you could do with this strategy. I think it's pretty cool. So then we use Blake Young's levels to determine oversold and overbought conditions. I call it the big green monster, and it works wonderfully. Hey, how come it's not a number 8? That should be an 8, not a. It made a little sunglasses. So number 8 is use Scott Rubel's screwdriver along with the big green monster to help predict market movements. So we use that, I think, quite effectively to determine, you know, whether the market's more likely to go up or down. You know, it's not perfect. We're not always right, but it really does a good job of identifying extremes. Number 9. Now, number 9, I got to find the article. And I found this article somewhere, and I'll share it with you, about using the 200-day simple moving average on SPY. So if you're a business, if you're above that, it's business as usual. Now, here's where you may want to get concerned that TQQ is going to have a big drop. They found that it was more likely to happen, the TQs and the Nasdaq would really drop more often if the price, if the S&P 200-day simple moving average, if price is below that. So what you could do, you don't have to, you could maybe give this as a permission rather than a have to. Someone said in the comments below, I think that you're going to get whipsawed on that. I'm not sure who said that. So, you know, business as usual, you may want to be concerned if you're below the 200 simple moving average. You know, maybe you should move a little bit to cash and bonds. And then I would encourage you to rebalance annually and rinse and repeat. So the above portfolio should give you these Greeks. So, you know, these people that say you can't do it long term, you know, they don't manage portfolios by the Greeks. But what this portfolio will give you is positive deltas, positive theta, and most importantly, positive vega to help the portfolio during those big downward moves, right? Now, why would I go and print this on Tasty Trade Options and I put it in Reddit as well? Why would our broadcast, our little strategy that we're about to do? Because I like other smart people looking at what I'm doing. Now, y'all are smart in here. Some of y'all are the smartest minds that we've encountered. I like putting it out there to the world. I like people to kind of poke holes in it, you know, because someone's going to come up and eventually say, oh, Bobby, you forgot about this. And I go, dang, I'm such an idiot, right? I should have thought about that. But I like other people kind of looking and saying, now, here's the thing. Let's say this is the best strategy. The Sweet Butts is the sweetest strategy. I just love the name Sweet Butts. Let's say the Sweet Butts strategy is just the greatest thing since sliced bread. So you and I get real excited and we want to share it to the world because we want to end poverty all across the world. So we publish this in the Wall Street Journal and in the Bowden Bulletin or the Tallapoosa Journal, right? And we give it to everybody, every newspaper in the country, put it everywhere. How many people are going to actually do this strategy? 0, 1, 2, 3. I mean, really, I mean, people are just, you know, because they'll do this till the latest, greatest thing comes along. It's just the way we do. I do. You see me, I experiment all the time. I love experimentation. So if you're going to try this, I would recommend that you do this in a paper portfolio, or you do your allocation TQQQ much smaller, right? Maybe you should go 50-50 or 40-60, you know, much smaller. But I think you could play along with this too. Now, Matt wants me to do a small account challenge. I need to do that. I think that would be fun. So maybe we'll work something up on that. All right, so this is the strategy in a nutshell. So with that, let's see how you would implement it. So I do the same thing that I do every day.
I had a quick question.
Yeah, Jason. Hey, Jason.
Yeah, so hey, I've been on vacation, so I've been kind of gone. But instead of buying TQQQ, is there a reason why we want to buy it rather than, you know, selling puts and waiting to get assigned?
Yeah, you could absolutely do that. Run the wheel on it, right? Absolutely.
Yeah.
And that way you get it at a much better price, right? There's absolutely nothing wrong with that. Or what else could you do? Let's say you don't want to buy the actual shares, then you could buy leaps as well, right? Buy in the money calls, at the money calls, way out in time. You can do that too. Whatever floats your boat. It's just basically saying, and I'm about to show you my back test. Okay. Now, Jason, you can help me so much on this. I know you can. Jason, y'all, If you don't know Jason, Jason is responsible for updating our screwdriver to where it works so beautifully now. Oh my gosh, it's just wonderful. Did a lot of that. So you could probably help me to work out something to back test this strategy. Again, this is what comes into the mind of a crazy person sitting on the beach. I think about these things. So I was sitting there going, everyone says you can't hold TQQQ long term. It's only meant for to hold for a day or two, or you can't hold it long term. And I said, well, why not? Why can you not? So let's, excellent. Yeah, you could will this thing as well, man. You could sell the puts, you know, say a couple puts. If it goes down, you get a much better price. You could be assigned the shares. Then what do? You flip around and you sell covered calls on it. You can absolutely do that. Maybe that's what I should have done. Not a bad idea at all. So let's show you some stuff here. Let's look at the market first. As we always do, we look at AD. What is AD doing? Well, it's kind of trending upward, isn't it? AD is at 258, pretty strong advanced decline for the day. Then we go up here and we look at our opening 15 minutes to see what we did in the first 15 minutes. So you see here, we were from 87 to 97, so 10 points wide. This little thingy majig here is the cash open. This is the value weighted average price. It is going upward. Price is above. Blue line here is the overnight high. We have now taken out the overnight highs in the E-minis, and we're up 0.68% on the day. Go here, we look at volume, see if you see anything interesting there. I really don't. You know, volume, we're now at lunchtime chop. We are above the hourly mid-band. This is the hourly mid-band that adjusts every hour. And we've hit some pivot point right here. Okay, market's up, market's up. All right, what else do we look at? So the next thing we look at, y'all know we're broken records here. We do the same thing every day. Sometimes I think, God, you're going to get bored, but I try to bring new stuff every day, right? So we're going to look at our volume profile. That really helps us out so much. And if you're new with us today, we draw something called the Big Green Monster. We do it at the first of every month. Blake Young showed us how to do this, and it's probably the strongest club in our bag. And I do something that I think he doesn't do. I combine it with volume profile. He may combine it with volume profile. I don't even remember. So as you can see now in the E-minis, we are above the 20, the 50, and the 200 moving averages. The area where volume is really comfortable, where the most volume is traded in the last 10 days, is at the 43, 48. Would it surprise us to see a return to that area? It wouldn't surprise me at all. So I'm ready for that. We go back down to here, I'm good. But now price has gone from a period of being oversold to a fair value. So price is fairly valued. And as you can see, it's heading up to where we would expect it to do in fair value to 45.15. Wouldn't surprise us at all to see it up to this area here. What is that? 45.50 something like that. Anyway, so basically, Bobby, what you're saying is price can either go down or up. Exactly. That's exactly what we're saying. Now, we can tell you what we can use something with this that really helps us. And that is called, the next thing that we go to is our skew driver. What does skew tell us? Tells us where the skew is and tells us what we should expect. So let's look at this. Do y'all remember what skew driver was yesterday? Remember, I didn't have my right thing. So it's 41 today. You look at where it comes here and the price is at 520 and you go, it's 41 away. Okay, so let's put that into our thing. And I'm way behind here, but we'll just start it again. We'll go 1018 or 1019, 21. And we'll say that it was 41 today. 41 away. Now, what I'm going to do is get this to where it automatically does that. If this has something in it, then this will be 25 and this will be 35. But for now, I'm just putting in 25 here and 35. Why? Because the 25 and the 35 are where the normal ranges that we expect skew to be in the SPX, right? This is normal. This is what we call normal, all right? If the skew gets way above normal, then we expect a reversion. Okay, so the skew is up here. So when the skew is this far away, what do we expect? We expect the market to go up and skew to return to some sense of normalcy. Everybody with me? When it's way out of line, believe me, it will come back to its arithmetic mean or average. So right now we're a little above that, right? So if I'm looking at skew today, now skew can go from 41 back to 96 today. Skew can do whatever it does. But as I'm looking at it now, skew's kind of normal. It may be a little higher than normal. You can see this, right? I probably need a linear regression line that kind of, goes in there to show you what the average is and everything. But so what I would expect if I'm looking at the market, I would expect neutral to bullish markets, because I think at some point our little 41 is going to get back into the 25 to 35 that it normally is, right? We went forever saying, hey man, you were dead on with the average. Now look what's happened. We've got some bumps in the road, don't we? Some volatility started. But right now, if I had to guess, looking at the green monster and looking at skew, my assumption is that we're going to be neutral to slightly bullish based on the skew. It's a wonderful tool that we have. So remember, that's two of the tools that we have. So I'm not really scared of TQQ right now. But Bobby, this is in the S&P, and your chart that you just looked at on everything is S&P. Okay. But those are highly related underlyings, aren't they? This is highly related to the S&P. We know that. So when I'm saying we're using Ron Bertino's Black Swan, let's see, the big green monster. You just saw the big green monster, and you just saw a skew driver in action. And all those are available to you to use as well. Now, let's look at the big green monster on the Nasdaq. Okay, so we can go over here. I drew it yesterday, and I drew it on the NQ futures. I like doing it on the futures more than like QQQ because it shows overnight action, things of that nature. So if I'm making decisions based on NQQ, where are we here? So price is above the 20, 50, and 200. We see a point of control down here on the volume side. Remember, the green monster is market profile. The volume profile, this volume here is volume profile. So we're using both volume profile and market profile to make our decisions. So same thing as within the E-minis, price went from a condition of being fairly priced to overbought, and it kept saying, hey, we're going to switch right through this. So it then became oversold for this fair value range. So now we're in this fair value range. So where would I expect price to go? Probably, just as we said, neutral to trending higher. Now I'm wrong on this a lot, but you will see this thing work time and time again. For example, I drew this back on October the 1st. Look at this. See how it pegged this level here? Look at that. It just pegged it. See how it pegged this level here? I don't know how it works, why it works, but it's a phenomenal little concept of the big green monster. Okay, so now we've kind of got a feel for the overall market. Let's show you now the back test that I did. Now, am I the greatest back tester? Oh, crap. No. But here's what I did. Here's what we did. Basically, I said, let's start off with $15,000 on the day that the TQQs began trading. Okay, so we're starting out with $50,000. And what we're going to do is we're going to allocate 80% of the 50,000, so 40,000 into the TQs. And we're going to keep 20% in cash. Well, why 20% in cash? Because if you go to Portfolio Visualizer will tell you that, well, Bobby, your portfolio would have performed much better, young man, if you had kept 100% TQQ from 2/11/10 through the present. I got it. Okay, I got you, Portfolio Visualizer. It would have been optimal for me to keep 100% in TQQ. I didn't. Why? Well, because I need to buy and sell, move in and move out. I'm not a buy and holder, right? I would rather sell when things are overpriced and buy when things are underpriced. So that's what the Lucello algorithm allows us to do. So we start off with $50,000. Now, how many shares was that? Now, these, I used the closing price, right? I used the closing price. And it is split adjusted. So there's been some splits in here. So the price that we actually had was not the price. If you look back, the actual price was not 87 cents on that day, but this is the adjusted price of TQQs on the day that we started this portfolio. Now, this is the most important thing that I want you to remember, okay? Because when I show you these results, I think some of your jaws are going to just simply drop. And how many shares did we start out with? Remember this number. We started out with 45,977 shares on February 11th. So in a period of going from the initiation and doing that and using the Lucello algorithm, how often did we update? I updated once per month. You see that, once per month. And I did 0 rebalancing. I didn't rebalance the thing. And I found out that I was really, I should have rebalanced at the end of every year. So in 2014, I started rebalancing. Let's see, right here's where I started rebalancing, 12/30/14. And basically at 12/31/14, I went much more conservative. At 12/31/14, here's my rebalancing. At the end of the year, I would put 50%, not 80%. But this is important for you to understand the returns. It would have been much better if I'd kept 80%, but I went more conservative. I was like, man, I've made a lot of money. Let's go conservative. 50% TQQQ and 50% cash, okay? So let's see how this thing performed. I just wanted you to know everything that went up. So here's our annual returns here. So we go $50,000. In 1 month, we're up 60,000. Yay, we're up 21%. So just kind of watch it over here. 21, 22, crap, we lose 6,000. We're only up 9. We're only up 16. We're only up 53. We're only up. So we get to the end of 2011, no rebalancing, and we're up 59%. Dang, if that ain't good, right? So how do we do at the end of 2012? 2012, we are up 107%. I like it. I like it a lot. At the end of 2013, we are at 190%. 2014, again, this is the end of the year when we started rebalancing. Here's our rebalancing, where we go 50-50 TQQ, 50-50 cash. So we're at 253% at the end of 2014. So then we go 2015. How do we do here? Now we're up 290%, 290. Let's go 2016. We're up 328%. 2017. And again, I'm rebalancing at the end of each year. Now 50-50. End of 2018, holy cow, we're up 487%. Now keep in mind though, in that last month, we even lost $35,000. Check that out. But we were up 558%. So we realized that a portfolio of just TQQQ and cash, you're going to have some volatility. But that's what the Lucello algorithm craves, right? Because when price goes down, you're buying shares. When price goes up, you're selling shares. So let's see what happens at the end of 2019. So here we are. We are up, ladies and gentlemen, 848%. Dang. Our running profit on the $50,000 account is $424,000, and we're now at $474,000. Sweet. Let's go to the end of 2020. But remember, 2020 is where we had the Corona crash down in this area. Holy cow. Before the Corona crash, we were up 888%. And dang it, look what happens in February. We're down 42,000, and now we're only up 803%. Wang. Wang. Right? Cry me a river. Oh crap, it gets worse in March. Now we're only up 654%. We've lost 111,000, what is that? 100 and whatever, $1,000. I'm not good at math. All right, so we've lost a ton of money. We're only up 600. We've only made profits of $327,000. I thought it was going to wipe us out. The Corona crash didn't wipe us out. So let's keep going through 2020. How do we end 2020? How about this? 1,470%. Wham, cry me a river. Okay, that's good. Well, how are we doing in 2021, our current year? So I brought it to Monday state. We had taken a $50,000 account, and we have now converted it to a $930,000 account with a overall return of $1,760.85. Applause, please. Now, here comes the amazing part. How many shares do we hold as of October the 18th, 2021? Remember, we started out with 45,977 shares. Anyone want to guess how many shares that we own at the end of 10, 12 years? Higher or lower? Anyone want to guess? With a 1,760 return. Okay, I know this is going to be amazing for you. So instead of holding 46,000 shares, we own 2,103 shares. Let me bring that back up so you can see the comparison. Is that amazing? So we started off with 45,000 shares, 46,000. Then we ended up with 21,000 shares. But yet here's our count. We are now $293,000 in stock, and you've got cash of $637,000. So my question to you is this: if this is your portfolio at this time, and you've taken $50,000 to $1 million in about 10 or 11 years, do you care if TQQQ goes to zero? Do you care? No. You can only lose on TQQQ what you have invested in it. It may be the most volatile thing on the planet, but a share of an ETF that you own cannot have a zero, past the zero value. It can only go to zero. It can't go to negative 100. Okay, it's not a future. It's not, it's an ETF. It can only go to zero. So if it goes out of business, goes to zero, you've lost 300,000. Wham, cry me a river. You got 637,000 in cash. Wham. Right? To do with whatever you want to do. Is that amazing? So you actually end up October 18th, you're holding 32% in stock, 68% cash. So let's say you're older now, you're 10, 11 years older, and this is how you want to keep your allocation. Keep it that way. Then rebalance at the end of the year. Go 30% stock, 70% cash. Cash is good, right? Or you can do all your little options trades that you want to do on that. So now keep in mind, this is not selling the covered calls. This is not doing, this and that and all the other stuff I talked about doing. This is just starting out 80-20. Then at the end of 2014, going 50-50 and using the Lacello algorithm to make your buy and sell decisions. I feel like I need a nomination for a Nobel Prize in economics or something. Now, maybe there's things I haven't thought about, right? But check it out. So when it goes up, the algorithm tells you to sell, right? As price goes up. Now, when you have a big correction, you love. Now, here's the great thing. When you're running this type of program and you see the market just tanking, you love it. Why? Because you're getting to buy additional shares that you're one day going to come back and in a couple months sell again when it goes up. Bobby, how do you know that the Nasdaq's going to always go up? It's technology, y'all. It's technology. I mean, if you had to guess and bank on technology for the next 50 years as a sector in the United States, how do you think it's going to do? It's going to be pretty darn good. What if we have another, .com? But good. Let's have another .com, because guess what? We're going to buy shares when it goes down. Lacello is going to tell us, the algorithm is going to tell us to buy more shares. Because we eventually know that what goes down in 1999 comes up in 2021, right? It's restored itself. Now, all the time now, so this doesn't include our covered calls. This doesn't include our Black Swan hedge. This doesn't include all that other stuff that we got going on to protect ourselves in the event of downward movement. Right, questions on this at all? It's fine to poke holes in it. I want to see, if I forgot something. But let's talk about how we do manage risk now. So we got a couple of things that we do, right? We've got a Vix Hedge that we do. So what's the Vix Hedge? Let's see all of our stuff here. So let's show our groups. We got a Vix Hedge. At 120 days to expiration, we buy 0.0025% of our portfolio in Vix calls at the 10 delta. Okay, I got to put that somewhere. So we have what is called a Vix Hedge. Now, the problem is with the Vix Hedge, we normally lose money, right? You can lose up to 3% of your account on a yearly basis with the Vix Hedge. It's there for the doomsday when the market just crashes, right? So we've got that there. Keep in mind, you may lose up to 3%, but a max of 3% of your portfolio. Well, now think about it. If you're in TQQQs and you want to lose 3% on your Vix Hedge, you hope you lose every dollar of that, because that will mean that TQQQs have not tanked, right? That the VIX is not shot up astronomically. So you're fine with losing 3%. Keep that in mind. So as you can see, I have two here, two calls at 119, 91, 63, 28, and then I got two that are expiring today. So we keep that on. This is our Vix hedge. Okay. Then what else do we have to hedge ourselves? We have something called the Black Swan hedge. So, and you can search, if you've never seen me teach about the Black Swan hedge, then you can certainly, it's not my idea. I have accustomed it for the way I do it, and we basically create a hedge in the ES. Now let's see what it looks like. So basically you're selling 3 options and buying 5, right? And we'll talk about it more later, but probably not today because I'm just giving you the overview of the strategy. So let's go to Analyze tab. Oh, I wanted to show y'all something too. I had an order fail overnight. You remember we call this harvesting, where we harvest these. So I had 3 short puts to harvest. And after they harvested, I put another GTC order on my next 3 puts. Actually, I've got 6 there to harvest those when they get to 20%. And it just makes your hedge stronger. So my hedge should be stronger today than yesterday. Why? Because I bought back 3 of my short puts that were giving me exposure, right? Risk to the downside. So now I have no risk to the downside. So here's what we do on Thinkorswim. We go to ES. We want to look at single symbol, okay? Single symbol ES. And basically what we're doing is changing the volatility to what we think vol will look like on a 20% drop. Why 20%, Bob? That's just where I'm comfortable looking at my risk. I want to know what happens if the market goes down 20%, okay? So the market goes down 20%, and let's make sure I got everything in here. Got to get that up to 15, right? So what do I think the volatility or VIX will be on a 20% drop, with volatility being anywhere from 59 to 74%, which I think is very likely on a 20% drop in the market. So here's what we do. Here's what my hedge is doing. And this doesn't include the VIX hedge, by the way. This is just my ES Black Swan hedges. So how will my Black Swan hedges perform? Here we go. Let's see how we're doing. Bye-bye. On a $50,000 account, we're up 166,000. Let me say that again. On a 20% down move, we're up 166,000 on my Black Swan hedge. Well, Bobby, how much money do you have in, dude, how much you got in those TQQs? Now remember, the more I can lose on my TQQs are the amount that I put in it, right? So let's see, how much did I buy there? Let's see. I bought, to start this, $32,715. So let's say TQQQ goes to 0. How much money have I lost? I've lost 32,000. Dang it, crap, right? Dang it. Do I care? I'm up 167,000. No, anywhere from 114 to 166,000. This is a projection, right? Do I care that I lost every single dollar on my TQQs? Not at all. Oh, Bob, how's your whole portfolio look, man? Let's check that out. How about the whole stinking caboose? How's that look? So wait a minute, let me hide simulations. Maybe that's not true. It's not okay. Hide simulations. So I'm up 147,000 instead of 166. My bad. All right, so you go over here, you go single symbol, or no, hide simulations, and instead of single symbol, you go portfolio beta weight. Okay. So let's see. So if everything goes to crap, I mean, we lose on every stinking position we got, and the market goes down 20%. Do I care? No. Why? Because I'm up $29,000 to $70,000. That's with TQQ going down as well. Everybody see the power of that? Drop, baby, drop. Let me make, $29,000 to $70,000 on a 20% drop. Yeah, but Bobby, what if it does 35% like it did back in the Corona crash? Well, friend, let me tell you. Let's just see what that looks like. So go 35, make y'all happy. All right. So say we have a Corona crash again, and we just immediately go down to here. TQQs go to 0. I don't care because I'm up between 112,000 and 173,000 on a $50,000 account. Hey, Bob, what about if we have a grind down, baby? What if you got a grind down? That's a good question. What if we have a grind down market? Maybe it's back to 20. Do we have anything that can help us on a grind down? Well, let's see. 4 expirations. Let's see what we got here. 4 expirations. Let's see if we can find just we'll do this. Let's change this now. We'll go to MES. Let's see what we got going on in MES. Okay. So we got MES here. 4 expirations. What happens if you, oh man, I don't have a price. Basically though, let's try to check this out a little bit with what we got going on here. So here we are today. Make sure we're today, 10/19, 10/19. All right, so we're here today, right? So let's start looking at our numbers over here if the market starts gently going down. Okay, look, 14, we're up 17, 22 on the bottom, 24, 25. We're at 2,900, we're at 30, we're at 32, we're at 37, we're at 39. We're at what we're doing now, we're at 4,000, now we're up 4,100, now we're starting to go down, but we're still up all the way down to here, which is our break even. So you're talking about the market going from 45, whatever it is, up to 45.07 down to 39.96. And we've got trades in here that are giving us profits on the move down. Well, Bobby, is that enough profit to offset your losses in the TQQ? Well, really, I don't care as long as overall I'm bullish on TQQ and technology sector in general. Right? I really don't care. By the way, have you looked at the list of what is in, Bobby, this isn't diversified enough. Okay. Hold on. Let's see if it's diversified enough. What companies are in the Nasdaq 100? Okay. Let's see who's in here. Okay. So if you think this is all going to go bust, let's check it out. We got Apple, Microsoft, Amazon, Tesla, Google's,
Hello.
Nvidia, Facebook. Hello.
How are you?
Who's in?
Doing good.
Is the only entry in the spreadsheet the 50,000, or are there any other places we need to enter other data? Yeah, I'll show you that. That's where you begin, certainly. And MRP, we probably need to do a one-on-one to get you acquainted with that, or maybe I'll do maybe even tomorrow I can do a session on setting up the spreadsheet. But let's just look at this. Nvidia, Facebook, PayPal, Adobe, Netflix, which I love because I watch all the movies, Comcast, Cisco, Intel, PepsiCo. Y'all, we got Pepsi in here. We got Costco in here. We got Texas Instruments. We got Qualcomm, T-Mobile, Advanced Micro, Moderna. Moderna, that's the vaccine people, right? We got Starbucks. We got Charter. I mean, look at this. Look at this. I mean, this is the companies that we're investing in. CSX? You kidding me? Zoom? Autodesk, Illumina. I mean, I want you to see the companies that are in here, right? Keurig Dr. Pepper. How about that? Got eBay in there. Monster Beverage. Kraft. We got dang ketchup in the portfolio. What else we got? We got Match. We got all the singles out there. O'Reilly. O'Reilly. Cintas. That's the people that bring mats to businesses, and they bring uniforms to businesses, right? This is crap. We got Walgreens, Microchip, Ross. When I was on vacation, I always look for stores that men don't go to so I can go to the potty. I went into a Ross store, beautiful bathroom, stayed in there about an hour doing my stuff. We got Ross in there. We got, I mean, all this stuff, y'all, that are in the Nasdaq Dollar Tree. See, look at this, y'all. That's a pretty dang diversified portfolio. And the wonderful thing about it, we don't talk about this a lot, this is self-cleansing. Let's say, God forbid, Apple goes bust, or they, whatever, they'll move down in the weighting, right? But if they totally went bankrupt, they'll be removed from the Nasdaq 100 and another promising company will be added. This is self-cleansing. It's a it's a hodgepodge of some of the best companies in the world. What are you scared about over the next 5, 10, 20 years? Now, what we've been able to do is to take something that they say you can't do and buy shares. And we, who are all options traders, are now able to trade options as well. So instead of you going in and having to buy and pick the winners, you know, because you're like, man, I got to trade Apple, man. It's Apple. No, you don't. No, you don't. You don't have to find the stocks. Why would you have to find something? This looks like a pretty good list to me. I kind of like my diversification here. And then you give me leverage at 3 times. I feel really good. Bobby, I don't want to take that much risk. Guess what? There is a ETF that is twice the leverage of QQQs. Do that. Heck, you could run this solely on QQQ. Right? You could totally do it just on QQQ. I kind of like the leverage aspect of it. I kind of think over the long term. But Bobby, what about the volatility decay? Yak, yak, yak. Go to Portfolio Visualizer. Now, here's what's going to make you sick, though, because you say, man, I am all in, baby. I am setting me up, right? But then you'll start kicking yourself if you go here and do this. So let's say that you say from 2010 to 2021. What if you've done this, right? 2010 to 2021. Include year-to-date, yes. We want to see what we're doing up through the year-to-date of this year. And let's say you started with let's say you started with, well, I'm going to do 50,000 first. So you start with 50,000 this, and you do no rebalancing or rebalancing. What do you want to do, right? And so you come over here and you say, okay, baby, I'm all in, TQQQ, right? And you go, I'll start like Bobby did. I'll say, I'm going to put 80% in TQQQ, and I'm going to put 20% in cash. How will we do, Bob? Now, this is what's going to make you sick. So come over here to my spreadsheet again, right? Well, sorry, where's the back? Here. We started off with 46,000 shares. So you would do the same thing here. You'd be starting off with 46,000 shares. And let's say you just did this and never did another thing. You just put your money in and let it work. So let's go do that. Portfolio Visualizer. All right, how would you sit today? We're almost at $1 million. If you had done that back in 2010 with $50,000, this 80%, 20% allocation, today your account would be $3 million. 3.2. Now, that's a lot better than my $1 million that we made, right? But think about it. You still own 46,000 shares of the TQs, right? Your max drawdown was 48%, which happened on February 20th and March 20th, right? So, but look at that. There's your equity curve. If you just said, man, I'm going to set it and forget it. I ain't going to look, Bobby. I'm just going to put, 40,000 in and let her ride. Go, baby, go. Go, baby, go. You would certainly outperform my way of doing it, but with much more risk, because at the end of the day, I'm holding no risk really now, right? I've got, what's my thing at? I've got 2,100 shares, a measly 2,100 shares from 46,000. Ta-da! Now, I'm not saying this is the best strategy known to man. I'm not saying that. I'm saying it's a pretty well thought out strategy, right? That gives us a lot of stuff to do. Only problem is, so I did sell my covered calls yesterday. So I got 200 and let's see. I've got 243 shares. I started this on Friday. I'm up $1,900 since Friday on TQs. And why not? It flies, baby. I mean, when it flies, it flies. Now, Bobby, you may be down a couple grand in the day. I know. Hey, that's fine. But the spreadsheet, the algorithm will tell me exactly what to do. All you got to go is go in and say, how often are you going to do rebalance? You're going to do it quarterly? You're going to do it monthly? You're going to do it weekly, bi-weekly, annually? Come in, open your spreadsheet up, and it's going to tell you exactly how many shares to buy, exactly how many to sell. It's the most boring thing you can do. And the only thing that we're doing is we're overcomplicating it a little bit because we're putting in hedges, aren't we? we're putting in hedges along the way, black swan hedges. We've got all this stuff. And at the end of the day, you'll have a portfolio that looks something like this: positive delta, positive theta, and oh my God, positive theta. And if you don't know what positive theta is, it is sweet. Sweet. Shall I call it nirvana? Because when the market goes down and volatility goes up, are you scared when you have vega and volatility increase? That's where, option sellers face their biggest hurdle. It's not on being out of balance in deltas. That could come and go. But if you've got humongous negative vega, friend, you got issues when volatility drops, right? Cool stuff. I think I've thought of just about everything in putting this little strategy together. And quite simply, it wouldn't have come had I not had a vacation. Now, when I have my next vacation in December or February, try to plan for a year, I'll probably come up with something else. I love testing. This is a game to me, right? I love coming up with strategies. I love playing chess now and just looking at the board and trying to figure out my opponent's move and where we're going to move. And so we're always coming up with different things to show you. And I test it in some portfolios. And then if it works, I put it to use in other portfolios. I'm willing to test it here and see how it does. So far, I like what I'm seeing, because you're in a bull market still. I got positive deltas. You're in you got theta. You don't have any theta burn. I got great theta because I'm still selling options, aren't I? Even with all those long options that I own, and I've got positive theta. Isn't that sweet? Questions? Are you excited? Anybody excited? Or am I overly excited about that? Jim, you've been here a long time. Y'all excited?
It's super cool.
I mean, I think
so. Do you just stick the TQQQ in the AIM and you remove everything else essentially? Is that how you've been setting it up?
Yeah, I just took everything else out. No, just put TQs in. Now, if you want further diversification, do 50% TQs and 50% UPRO if you want the S&P 500 involved. Now, the problem is I went to Portfolio Visualizer and I tried that. And with Portfolio Visualizer, I was like, what if I did 50% UPRO, 50% this? And it would be like, hey, dude, it would even show me the optimized portfolio. And it said, look, dude, you need to be 100% TQs and forget the UPRO. It tossed out UPRO. And that's another thing you can do with Portfolio Visualizer, right? And this is free too. You can use this. You can go in and let's see if we can do something. You go optimize portfolio. So you go, where's that at? Optimize portfolio. Here we go. Portfolio optimization, right? And so we go, let's say you're going to go UPRO 50%. And TQs 50%. You're just going to go, that's your portfolio. You're not going to hold any cash. TQs 50-50. And you go optimize. So it'll show you your portfolio. So if you did your portfolio, here's this, right? And then it will say, dude, if you wanted to get the maximum Sharpe ratio, well, you should have went 100% Qs. Okay. And then it'll show you your performance on $10,000. You'd be at 429. But if you had gone to the optimal portfolio, you'd be at 18. Aha. So then you go, well, wait a minute, let's change that. I don't give a crap about the maximum Sharpe ratio. What if I want to maximize my return subject to how much volatility? And I can tell you 50% is where it will be maximized. Wow, 50% volatility, that means your account going up or down by 50%? Yeah. So how would 50-50 of UPRO TQQ look, or is there something better? And the little portfolio visualizer comes back and says, dude, you might like doing the 50-50. And of course, that would make you 429,000, but you can optimize this portfolio at 50% volatility by going 100% TQQ, and then you'd have 810,000. Oh, I got it. Well, what if I change this volatility to 40%? Huh? Change that down and say, man, I'm only willing to gamble, 40%. What does that look like? So I'm going in 50-50, and it says there's no thing that satisfies that, right? So you got to go with a higher volatility. But isn't that cool? So you can automatically realize how to, and if you want to be greedy, buy and hold, do that. I think that the Licello, the Black Swan hedge, and what we're doing just gives you so much coverage to the downside. It's almost like you want the market to crash, and even though you're holding TQQQ, probably the most volatile asset of all. But isn't that what Licello told us? Licello told us it was designed for stuff that moves quickly. And if you read the book, and if you've not read the book, I swear to y'all, grab the book on Amazon. Go to Amazon. Let me show you the book. Show you the book. How to make $1 million next time. Here we go. Let's find Licello's book. Here it is. $9.99 on Kindle. That is the best $9.99 you will ever spend. Now, what you'll find is what I've done is taken Licello's algorithm that he used on 3x5 index cards, and I just run it on a spreadsheet. Ta-da! Tells me what to do. It tells me the current price of the stock today is 142.38. Look at this thing. It updates every now and then. Now it's 142.36. It runs for you, y'all. So, no, I'm sorry. I only started 72% in the stock and I did 72% instead of 80% because I was going to put 8% in bonds. And then I go, Bobby, you're not a bond trader, you moron. Now, if you look at the Boglehead stuff and the other thing, the hedge fund deal and all their portfolios, then you could use TMF as a portion, which is 3 times the 20-year U.S. Treasuries. You can do that if you want to. I don't think I need it. I think I got enough stuff to protect me on the way down. I don't want to be putting money into bonds. I just don't like bonds, especially as interest rates go up. What happens to bonds? Right? Interest rates go up, bond values go down. So I never have been a fan of bonds at all. Okay. So it's very, very cool, and that, just in 3 days, I'm up 1,800. Keep in mind, I'll be down 2 or 3 or 4 or 10 someday. It happens. But this take action button will tell me to do something. What's it telling me to do today? Nothing. So you know what I could do? I could go and, swim, feed the ducks, catch the ducks, put them in the pen, do whatever I want to. Live your life. Let this thing run. Check it once a week, check it once a month. But, continue to put your little trades in. Well, what would I do today? So if the market is up, let's go back to the market. The market is up today. Okay. What is Vix doing? Let's see what Vix is doing. Vix, here's how you further protect your portfolios if you want to, and get you some beta too. So Vix is down. Oh my gosh, look, y'all, we're at the lows of Vix. There is no better time to put on a calendar trade. What do you mean calendar trade, Bob? Let me just show you. Let's do one of those and we'll be done for the day. So here's what a calendar is. And I can put them in the SPX, but generally I like layering them in, right? Layering in these little calendar things. And you do it on up days when the VIX is down. I cannot think of a better day to do one of these. And this kind of hedge on your portfolio. So I like putting them in SPY. Okay. Well, Bobby, why wouldn't you put one in the Qs? Yeah, since you're trading TQQs, I got it. I'm just more comfortable putting in SPY. They're highly correlated. So let's go out 60 days. So I'm gonna go right here, 60 days. And I'm gonna buy me the option that is 40% probability of being in the money. So let's go do that. And then we'll show you, we'll analyze this thing, we'll let you go. So let's go down here and let's buy one, 40%. You can see I've already bought some in the past, right? You see I'm all leveled in here. So we'll go out, see, we'll buy 40% probability of being in the money. So here it is, it's gonna cost me $785. Hit your little button, 442. You need to remember 442. So that's at 59 days out. So I need to go in 30 days now. So that'd be about 29 days. So let's go into about 29 days. Right here, 442. Let's go find it. And you got to hold your control button down to do both orders. So here's the 442 that we're going to sell for this. All right. So that is called a calendar. Now let's just look at it. It's going to cost me $413 for this. So let's right click and let's analyze the trade. All right, so we go over here. We're going to go hide positions. So we just show you this one trade. Oh, that's 3. There's our calendar. And I always I'll click it to make sure this goes flat to tell me that's the only trade that we're analyzing. Right. So here's my calendar that we're thinking about putting in. There it is. Isn't that beautiful? So what that does is gives you a little protection for the downside. See it here? Move down, little protection. You move up, well, you start losing money, right? But it's a controlled amount. That's just, you know what you're losing. And so it just kind of gives you a little cushion to the downside. So what does it give me in deltas? Negative deltas. Gives me positive theta. And again, that oh so sweet positive theta. Isn't that cool? So, you know, it's kind of a little hedge itself. And it's a smart thing to do when volatility is low. How do you manage this? Well, I'll look at my forest first and then the trees, right? I take my calendars off if they're up, you know, 10% is what I'm looking at. So if I made, you know, 41 bucks on this, close it. But look how it is affecting your creeks. That's the first thing. How, you know, are you comfortable? Am I comfortable with having 34 positive deltas, this positive theta, and that positive theta? Oh, heck yeah. So do I necessarily have to put this trade in? No, I don't have to. And I'd probably be a lot better if I didn't have all these other things weighing down on me at the time, right? We got our TQ cube, our VIX weighs us down. This, you know, was up 80%. Let's see. This, our SPY, this is our calendars. Our ES, you know, goes down on up days, but that's our protection to the downside. That's what gives us the phenomenal returns to the downside. Then I put one in on SPX. You can see that, which is a calendar. Not working out so right. But again, it's kind of one of the hedges that I've got open, right? So kind of sweet. And still, I got positive deltas. So I'm not going to put this on because I don't want to mute my positive deltas too much. Since the market's running up, I kind of want to take advantage of that. But I am protected to the downside. Bobby, will you show where your positive Vega is coming from? Yes. Been out a couple of weeks. Got you, Stacy. So let's see, the positive Vega is coming from my ES. See it here? So that's coming from, and the only thing I have in ES is Black Swan hedges, right? It's coming from my SPY calendars, but the majority of it is coming from my SPX calendar. Now, if you know, that's a big meatball. That cost me a bunch of money to put this on, right? But if you're, you know, really need the Vega, you can do the same thing I did in SPY, and you can just do it in the SPX. So that's where that positive Vega is coming from. And trust me, you want positive Vega on a down day. That's what you want. So I'm looking good. Down, I'm fine. Up, I'm still making money. You know, keep those positive. My delta's there. Keep in mind, I've got a covered call. I've got 243 shares, so I sold 2 calls. What if I get called away? Well, yeah, I'll miss up on the up move, but maybe I'll sell puts. Maybe I'll will this thing. It's a lot of good stuff that we can do. All right, guys, me and Beth's heading to lunch. Hope y'all have a wonderful day. I'll see y'all tomorrow.